Lloyds Bank warns that the global economy foresees losses of $14.5 trillion over the next 5 years. German exports rise 1.3% in August on a monthly basis. And the Reserve Bank of India maintains its key interest rate at 6.5% for the 10th consecutive meeting. You're watching Qnews. Welcome to the Economic Bulletin, where we present comprehensive coverage and expert insights on key updates regarding pivotal economic trends and financial shifts. Welcome back. We start off with Lloyds Bank, which has warned that the global economy may lose $14.5 trillion over the next 5 years due to geopolitical conflicts affecting supply chains. The economic impact could be significantly influenced by severe damage to infrastructure resulting from ongoing conflicts in Ukraine, Gaza and Lebanon, and shipping routes in the Red Sea and Black Sea. Lloyds state that over 80% of the world's imports and exports, approximated by 11 billion tons of goods, are transported by sea at any moment. Consequently, the closure of major trade routes due to geopolitical conflicts poses a significant threat to the resources essential for maintaining a resilient economy. A report from Fitch Ratings warns that the global economy is decarbonizing too slowly. While there has been improvement among major developed economies, emerging markets have failed to make reductions. The report noted that global CO2 emissions rose by 1.8% last year, compared to a global GDP growth of 2.9%. Fitch noted that while emissions from 10 developed economies fell to their lowest levels since 1970, emerging markets as a whole made no progress in decarbonization. In fact, the CO2 emissions and GDP of the 10 emerging markets monitored by Fitch rose by 4.7% last year. In the U.S., the global investment bank RBC Capital has estimated that Hurricane Milton could cause $60 billion in losses for the global insurance industry. This may lead to higher reinsurance prices in 2025, which could potentially benefit some insurance stocks. The hurricane is set to make landfall on Florida's Gulf Coast late Wednesday or early Thursday. This loss estimate is comparable to Hurricane Ian in 2022, the second largest insured loss after Hurricane Katrina in 2005, and is considered very manageable for the insurance sector. Insurers and reinsurers have responded to rising disaster losses by increasing rates and excluding higher risk policies. Moving to Europe, France's central bank governor says that the European Central Bank is very likely to lower interest rates next week. He noted that a cut is very likely and that it won't be the last one, with the pace depending on the progress in combating inflation. He pointed out that the ECB is expected to implement rate reductions this month due to sluggish economic growth. This year, the ECB has already reduced rates twice from record highs, and markets anticipate further easing in October and December as inflation decreases more rapidly than previously expected. Moreover, European Central Bank policymaker Yanis Varoufakis has expressed support for 2 interest rate cuts this year, with further easing expected in 2025 as inflation trends downward. He, who heads the Greek Central Bank, has also suggested that cuts in October and December would bring the ECB's policy rate down to 3%, which is still considered restrictive. He also noted that inflation is declining faster than predicted and could meet the ECB's 2% target by mid-2025. With further cuts anticipated, he suggested that the ECB may consider lowering rates at each meeting if inflation continues to decrease. German monthly exports rose 1.3% in August due to strong demand, particularly from the US and the United Kingdom. Head of foreign trade at the German Chamber of Commerce, Volker Treyer, said that the second slight increase in exports in a row is a smaller glimmer of hope, but no reason to sound the all clear. He said that the export economy is still under pressure due to the high costs for energy, taxes and personnel, but also excessive bureaucracy. The foreign trade surplus broadened to 22.5 billion euros in August from 16.9 billion euros in July. In Asia, the Reserve Bank of India has maintained its key interest rate at 6.5%, and that's for the 10th consecutive meeting, as anticipated, and it shifted its policy stance to neutral, indicating potential rate cuts as soon as December. RBI Governor emphasized that need for caution to ensure inflation remains controlled, while experts predict a rate cut cycle starting later this year with gradual easing into 2025. China's diplomatic mission has announced that Beijing has initiated a trade dispute with Turkey at the World Trade Organization regarding Turkey's tariffs on electric vehicle imports. The move comes amid growing global trade tensions due to China's rising EV exports, which some countries allege are heavily subsidized by Beijing to support its struggling economy. The statement described Turkey's measures as discriminatory and protectionist, and urged the Turkish government to comply with WTO regulations and rectify its actions. In Africa, Kenya's central bank governor says that his country expects more money from the International Monetary Fund by the end of the year. He also stated that the nation is in talks with the fund about combining the 7th and 8th reviews of its support program. He also said that they are in the final stages of an agreement with the IMF, with fiscal framework already agreed.
كل المستهدفين هن مدنيين.
وضع شيء مرعب، شيء بخوف.
And now to Lebanon. Prime Minister Najib Mikati has convened a meeting with a large delegation from economic bodies led by former Minister Mohammed Shaqir and attended by former Minister Nicholas Nahas. Mikati addressed the challenges faced by the country, emphasizing the need for cooperation to maintain economic activity and face the current challenges as swiftly as possible. After the meeting, former Minister of Telecommunication Mohammed Shaqir highlighted the alarming state of Lebanon's economy. He also indicated that unlike previous crises that saw a 30 to 40% decline in economic growth, the current situation has reached a standstill, with only a few food-related businesses remaining operational. He noted that the private sector is striving to endure this challenging period.
Lebanon's economy is expected to contract by 10% to 15% this year, according to BMI analysts, due to the Israeli aggression. While significant, this shrinkage is less severe than 26% decline seen in 2020 during the economic collapse and the COVID-19 pandemic. Around 1 million people, 20% of the population, have been displaced so far, and the damage is projected to exceed $5 billion by year's end, equivalent to 15% of Lebanon's GDP. Key economic sectors are also feeling the strain, with agricultural hit hard by airstrikes and fires, and the country's telecommunications infrastructure severely damaged. These disruptions are expected to lead to job and income losses for more than 30% of the workforce. Analysts are also predicting a rise in inflation from 37.3% in the third quarter to 47% by the end of the year, as increased demand and shipping disruptions drive up the cost of essential goods. According to Standard & Poor's, the ongoing conflict has undermined Lebanon's fragile economic recovery, with delays to critical reforms likely. They have downgraded Lebanon's foreign currency debt to selective default. Byblos Bank forecasts Lebanon real GDP will shrink by 0.3% in 2024, with inflation reaching 57.6%. In a bid to support recovery, the World Bank has approved $250 million to fund renewable energy projects, aiming to stabilize Lebanon's energy sector during these difficult times.
In the tech world, the U.S. government has announced that it may seek a court order to compel Google to divest parts of its business, including the Chrome browser and Android operating system, which are alleged to sustain an illegal monopoly in online searches. In August, the judge found that Google, who handles 90% of U.S. internet searches, had established this monopoly. The Justice Department's proposed remedies could shape how Americans access information, reduce Google's revenues, and increase competition. The department aims to prevent Google from extending its dominance into the growing artificial intelligence sector, and may also request an end to Google's payments for having its search engine pre-installed on new devices. Crypto.com has filed a lawsuit against the U.S. Securities and Exchange Commission, alleging that the federal agency is overstepping its jurisdiction by regulating the cryptocurrency industry. The crypto trading platform said its move follows the receipt of a Wells notice from the top U.S. market regulator on the grounds that tokens traded on its platform qualified as securities. A Wells notice is a formal declaration that the regulator's staff intend to recommend an enforcement action. And now we go back to talk about what's happening in Lebanon, specifically the developments in the Lebanese economy. And joining us now on Qnews to discuss this is economist Gianluca Loebfellow. Welcome to Qnews. Now, given the scale of the current crisis, what measures can be taken to mitigate further economic decline, especially considering the 26% contraction during the 2020 crisis?
Yeah, good evening, everybody. I think it's pretty difficult to design what would be the best measure. We have to take into account that there is a global slowdown. So clearly, Lebanon is in the middle of this war that we hope will end as soon as possible. but it's not the only geopolitical tension we're experiencing at the moment. But more important, we have an incredible global slowdown. So starting from China, US, yes, is growing faster than what other parts of the world are experiencing, but actually is extremely unstable and weak, the fundamental of this final push of growth. So the problem is that we are experiencing the imbalances globally, and particularly on the growth. Think about what China is trying to do over the last 2 weeks with an apparently an unprecedented fiscal stimulus that then faltered over the last 2 days. We are expecting this Saturday, the 12th, the Minister of Finance to eventually reposition themselves on a bigger fiscal expansion. Europe is having trouble in finding a firm path on fiscal expansion as well. So the problem is not just Lebanon itself, that is obviously
yes, but Lebanon domestically has major problems. Never has Lebanon faced the power vacuum that it's facing right now. And I'm talking about all institutions, not just economic institutions. You've got vacuuming political institutions. You've got the central bank of Lebanon, which is Banque du Liban, has a clear vacuum there. In 2023, the interim governor has been, or the governor has stepped down, and an interim governor stepped in. Until now, they can't actually appoint a governor for the central bank. So there's domestic problems and challenges facing Lebanon. It's not just global. What do you think of this?
Absolutely. But clearly, when you face, and it's not the first time Lebanon is facing domestic problem, but obviously when there is a good momentum or a reasonably good momentum in the area or globally, it's much easier to benefit out of a good momentum. What I was trying to say is that Lebanon has domestic issue, I agree, even though if I think about more recently in Europe, in Belgium, we had a period of 2 years of interim government that were the best 2 years of Belgium growth. So yes, I agree where there is not a specific defined leadership, both at central government and monetary institution like central bank, as you pointed out. Obviously, it's more difficult to sort domestic problem, but it's very difficult for any government at the moment in Lebanon, in the middle of a war, to establish an agenda who actually can be convincing on the growth prospect. It should have been using a global momentum that is faltering. So it's a cumulative problem. I wouldn't blame just a domestic dynamic. That is clearly is clear where it is, and they agree the lack of a leadership is extremely complicated. But unfortunately, Lebanon is not alone in this. If I think about here, I'm talking from France today, and France is in a serious trouble of lack of leadership. England is in a serious trouble of lack of leadership. So is not the only one, and that is a bigger problem, I would say.
How do you see the long-term economic consequences of such the problems that are facing Lebanon, whether it's global or domestic, and all what you've talked about? And there has been, of course, challenges due to the current escalation and the displacements of many people forced out of their homes. What do you think the impact of this on on Lebanon's population distribution and the economic productivity?
Yeah, clearly, I mean, when it's very difficult to now talk about productivity when we are facing a human issue and so an emergency. So I understand they look a bit cynical to talk about this, but it's true.
Yeah, that's why I said in my question a long term.
Yeah, exactly. But exactly. So please forgive me if I seem cynical in trying to look at the long-term perspective, but that's exactly what you ask. Every time there is a situation like this of instability due to war, we all know that actually there are a lot of opportunities that can arise from reconstruction and rebuilding. Bear in mind that we have at the moment a potential shift of powers toward what is called the global south, of which Lebanon is part of, that include as well a tendency of some country to try to de-dollarize the world. And so clearly, if this is the case, Lebanon is in the middle of this trend with all the Middle East who are actually heading this global south, the more role that all the southern countries should play, what is they identify themselves as a global south. So in reality, Backing this trend could be extremely profitable for Lebanon. I wouldn't say that it should go back to be the Switzerland of the Middle East, as it was pointed out before civil war, but clearly Lebanon, considering its cultural root and considering the strategic position it may play, if the global south, the BRICS, more intertwine exchange of commodity no longer in dollar but in local currency, can play a bigger role for Lebanon. So Lebanon can play a role in this.
Okay, now let's talk more about the immediate actions that should be taken right now. What are the immediate steps that could be taken to rebuild the sectors that have been critically affected, and how long do you think that recovery could take?
So first of all, in terms of time that we recover, I think is more a geopolitical issue than an economic issue. Assuming that, and hopefully this war will end soon, I would say that clearly on the infrastructure, that is, again, is not a Lebanon problem, is a much wider problem. The rebuilding of infrastructure is a necessity. Obviously, with all the new technology, we talk about artificial intelligence, can play a role in terms of productivity, and things can be rebuilt. Bear in mind that all the Middle East can play a bigger role for all the requirement of more energy for data center required, and the delocalization of data centers. So yes, Lebanon can play particularly a strategic role in this, but we are talking about infrastructure rebuilding. Infrastructure rebuilding is not a short-term recipe. It's at least 3 to 5 years to start with. So assuming that the geopolitical issue will be sorted, hopefully in a reasonable time, that we all hope, there is no justification for any war, particularly this one. We are talking about 3 to 5 years to start rebuilding on infrastructure, and then again on the role in the middle of the global south, building as a presence, as a firm foot in the global economic geopolitical equilibrium.
Okay, finally, to what extent do you believe the World Bank's $250 million to fund renewable energy projects could stabilize Lebanon's energy sector during these difficult times?
I'm not sure it's going to stabilize, but it's definitely a good start. I mean, the IMF policy normally to start with a specific package, but it's never just a one and only. So I'm pretty sure that above all with the Georgieva leadership, that we have seen already in other countries, when they see that the agenda that has been agreed between, in this case, Lebanon and IMF is followed through, is respected, all the deadline, the IMF can continue building and investing. So definitely under whatever the initial package, let's assume that the 250 initial package would be properly invested. I think it's just the starting of a process. It's clearly important for the renewable energy industry, but it's not enough. We underestimate the bigger role that this investment in green energy can have as well on inflation side. So bear in mind that these are inflating policy.
Gianluca Lobfalo, our economist, thank you very much for joining us on Q News.
Thank you very much. Thank you for having me.
Now, in commodities, gold extended losses for a sixth straight session on Wednesday amid an advancing dollar and diminished expectations for a larger rate cut in November. Markets are awaiting the minutes from the Federal Reserve's September policy meeting for further insight. Spot gold fell about 0.4% to $2,612.88 per ounce by 1:24 p.m. GMT, having touched its lowest level since September 20th on Tuesday. U.S. gold futures for December delivery eased 0.2% at $2,630.80. Oil extended losses on Wednesday as weak demand and rising U.S. inventories countered the risk of supply disruption from conflict in the Middle East and Hurricane Milton in the U.S. Brent crude futures were down 1.5% at $76 dollars and 0.6 a barrel by 1:24 p.m. GMT, while U.S. West Texas Intermediate futures lost 0.9% to $72.93. That's all for now. Here's a roundup for our headlines. Lloyds Bank warns that the global economy foresees losses of $14.5 trillion over the next 5 years. German exports rise 1.3% in August on a monthly basis. And the Reserve Bank of India maintains its key interest rate at 6.5% for the 10th consecutive meeting. That's all for today on the Economic Bulletin on Qnews. Stay connected for more news and updates. I'm Karim Hatem. Goodbye.